AMD stock just exploded. New highs, massive gains, and headlines everywhere. But let me ask you this. Is this rally built on substance, or is it just all smoke and mirrors? Because AMD just inked a multi-year commitment with OpenAI for 6 gigawatts worth of GPU power, enough to fuel a small country. They've also given OpenAI warrants to buy up to 10% of AMD shares at a penny a share. If this deal works, it could rewrite who controls the AI infrastructure stack. If it fails, it could wipe out those gains overnight. In this video, I'm going to pull back the curtain on what the OpenAI pact really means, the upside, the danger, and the one signal I'm watching that I think people haven't seen yet. My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor. That is a good thing. I don't do hype. I break down the numbers so retail investors like you and me can make smarter, more confident decisions with our money. So with all that out of the way, let's get into it. Advanced Micro Devices, or AMD, is a global semiconductor leader that specializes in CPUs, GPUs, and accelerators for data centers, PCs, gaming, and embedded systems. The company was founded in 1969, and fast forward to today, they've become a key player in nearly every corner of modern computing. The business operates in 4 major segments: client, gaming, embedded, and data center. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. And here's where I think most people are missing. AMD's strength isn't just in its products, it's how those products work together. Beyond hardware, AMD develops software stacks like ROCm, an open ecosystem for optimizing workloads and building AI applications. Put simply, this software helps developers squeeze every ounce of performance out of AMD's chips, whether they're training AI models or running complex simulations. And this combination of hardware and software is what makes AMD more than just a chip maker. It's turning them into a true platform company. So AMD isn't just selling chips anymore. It's selling an entire AI infrastructure. And that shift could redefine how the company competes with giants like Nvidia. And that's exactly why the stock's recent rally has investors asking themselves, is AMD finally breaking free from its underdog status? Well, let's see what's been going on with AMD's stock lately, because it's been pretty exciting. AMD recently reached a new 52-week high of $226.71 on October 6th and closed at $203.71. Year to date, the stock is up 69%, and over the last 52 weeks, it's up 19%. That kind of move doesn't happen by chance. It signals that something big is shifting behind the scenes. The recent spike was likely driven by the announcement of their multi-year partnership with OpenAI. That deal didn't just make headlines, it changed how the entire market views AMD's future in AI, and it's something that I've discussed in detail in a previous video, so check it out up here. Today, though, I'm going to be focusing on the risks to AMD's business model, which has been brought up recently in my Discord channel. And trust me, this part is where things really start to get real for investors. Despite its recent wins, AMD still faces some intense competition. With Intel's dominance in microprocessors and Nvidia's dominance in GPUs, well, it's easy to see how difficult it is for AMD to compete on a level playing field. And now that Team Green and Team Blue are partnering up, the pressure is now officially on for Team Red. And that's a tough spot, right? Because when your 2 biggest rivals work together, even a leader can get squeezed. Then we have the semiconductor industry, right? It's highly competitive, fast-moving, and cyclical. Success depends on launching products that drive transitions and deliver value. Protecting intellectual property is crucial since failure could erode advantages and increase costs. In English, if AMD can't keep innovating faster than its rivals, it risks becoming just another supplier in an industry that rewards speed and punishes hesitation. Now, beyond competition, AMD's reliance on Microsoft, software vendors, and distributors creates further risks of disruptions or lawsuits if these relationships ever fall apart. Also, their dependence on third parties for manufacturing and supply creates exposure to delays, shortages, or even lower manufacturing yields. So you could say that AMD's biggest strength, outsourcing production, is also its biggest vulnerability. When partners stumble, AMD will bleed time and money. But supply chains, they're not the only risk. One market in particular could turn into a double-edged sword for AMD. That's the Chinese market, which accounts for almost a quarter of AMD's revenue. Now, while China provides AMD with growth and revenue opportunities, it's also very risky. Regulatory measures from either the United States or Chinese governments can significantly impact AMD's operations and revenue. And we've already seen this story play out a little. When export restrictions this year hit Nvidia's AI chips, Chinese demand immediately shifted towards the domestic suppliers. And there's already been pushback in the Chinese market against US manufactured AI chips made by companies like AMD and Nvidia. And some rumors even suggested the Chinese government has been warning local consumers against buying US silicon. And if that sentiment spreads, I see AMD facing the same resistance, and that's not something investors want to hear. Also, in line with that, Huawei reported that it's going to double the production of their own AI chips for the Chinese market to meet that domestic demand. And this is a not so great situation to be in for US chip makers because unlike in the US, the Chinese government has a bigger influence over both consumer behavior and corporate decisions. So China isn't just a market for AMD, it's a geopolitical minefield. One wrong move could cut off a quarter of its revenue overnight. And while global politics are risky enough, AMD's next challenge is much closer to home, and it's all about execution. Because let's face it, AMD still faces stiff competition from Nvidia, and this competition could pressure pricing and limit profitability as hyperscalers often negotiate aggressively for large volume contracts. That's the game that Nvidia's already mastered, and AMD still has to catch up, right, if they're going to stay in the game. Lastly, while AI remains AMD's biggest growth catalyst, it also carries the biggest risk. Delivering on ambitious promises will require flawless execution. Delays in ramping up its AI ecosystem, failure to attract developer adoption, and security-related concerns could also slow down AMD's momentum and erode its market share. In English, it means that the hype train's moving fast, but AMD still has to lay the tracks in front of it. So AMD's future depends not just on innovation, but perfect timing. Now that I've unpacked the risks, I want to cover the company's financials in a future video, so definitely be on the watch for it because you won't want to miss it. Now, the real question is, what does Wall Street think? And is AMD stock a buy at today's prices? Well, a consensus among 44 analysts rate AMD stock a moderate buy with a high price target of $230. But this hasn't accounted for the recent spike. Based on the rating, though, Wall Street clearly believes AMD's growth story still has room to run. But there are some key points to consider. In the semiconductor business, AMD's reliance on third parties for sales and manufacturing does carry additional risks. And on the other hand, their push into AI remains AMD's biggest growth catalyst, and biggest risk. While the company has been expanding aggressively into AI and AI chips, competition with companies like Nvidia and Intel and others like Huawei remains fierce in both domestic and overseas markets. So Wall Street, they're optimistic, but I think cautiously. They're betting that AMD can execute, not just innovate. But what do you think? Do you think AMD is worth buying at today's levels? Let me know in the comments below. And while you're there, if you found this video helpful, do like and subscribe. It'll help others find the video, it'll support the channel, and of course, you won't miss out on my next deep dive. Well, folks, that's it for me today in this video. I wanted to thank you so much for watching, and I'll see you next time.